another edition of Sunday School with your boy Buck Bandit P, man. Before we get started, if you want your free stock from Robinhood, just make sure you click the link down below. If you open up a high yield savings account with Allah, you get a free $100 when you click the link down below. Man, credit offers down there, business funding down there, man. You can even support the channel, man. If I'm giving you something, you made some money off of play, man, listen, support the channel, man. Support your boy. You already know. But let's get right into it, man. Like the video, subscribe to the page. You like the gems that I'm dropping, hit the notification bell so you can be updated every time we drop them. You already know. Let's get right into it, though. We're going to get right into when to cut your losses. When should you cut your losses and when should you not? Like, when should you hold steady, stay low, keep firing, as we like to say? Or when should you be like, you know what? No, I'm done with this company. Because that's a real conversation we need to have. Like, a lot of people don't know when they should sell and when they should hold on. Because it is a right time to get rid of a company that you've been rocking with. So let's get right into it, man, this episode. So, the first thing, before I drop any other points, the very first thing you should know when it comes to investing, you should always know your exit before you enter. It's kind of like when they all my real estate people out there, they say you make money on a purchase. Like, that's really how it is with anything, for real, for real. You don't make money when you sell. You gonna have it baked in when you buying it. So it goes the same with investing. You should already know where you gonna exit before you even get in, because that's gonna help you navigate the emotions and the ups and downs. And it's like, oh, you like, no, it ain't hit my number, or it ain't do what I expected it to do, or it did do what I expected it to do. So now you got a strategy from when you going into these investments. So always know your exit before you enter. That's rule number one. So the first point of this is, it's 3 reasons, for real, in my opinion, that you should sell a stock. Number one, the first reason you should sell a stock is the thesis changed. Like, if the story behind the reason why you bought the stock in the first place changed, then it might be a good time to sell it. Let's go through it. Number one, if the revenue was growing fast, or they had a new product, or the industry was expanding, they had a strong balance sheet. All right, that's probably why you invested. Like, all right, bet. I see the growth coming. I see this new gadget or this new service they just dropped. It look like it's a high demand for it. So that means they got profits coming, revenue coming. Like, that's what you should be asking yourself anytime you buy a stock, honestly, for real. But now it's, what if any of that changed? What if revenue stopped growing? What if they was growing 20%, 30% year over year, and the last 2 earnings calls, they've been missing earnings and guidance coming in less, and they only growing at 15 and 10%. Now the story has changed. Now the thesis has changed. Now the reason why you bought the stock has changed. That is a good reason to sell the stock. Don't hold on to something because you like, oh no, I bought it at this price, so I gotta make sure it get to this price. No, don't worry about that, man. The market don't care about that. You're gonna hold that, and you just gonna keep bleeding. Trust me, I did it. Being stubborn and like, no, I'm getting my money back. No, we not chasing around here. We gotta learn when to cut our losses. So if you bought, the reason why you bought a company, if the story has changed, then that's when you might want to sell the stock. Also, the business has changed. Like, say if you know how different companies go into different avenues, or they go into different streams, or they'll try to cross brand and all that. Sometimes that can kill a company's balance sheet. This is a prime example right here too. Everybody know about Netflix. So the reason why Netflix stock just went up, and while it's going up right now, and everybody like, how is it going up? And they lost the Warner Brothers Discovery deal. Like, they really dropped out of the deal. Like, how is the stock going up over that? Like, if they would have got that catalog, they would have had the monopoly on everything. Yes, which is true. However, people don't realize how much debt they would have been taking on to acquire that company. So that's what made the stock and investors nervous. But with that uncertainty out of the way, like with all of that, with that without taking on all of that debt on their balance sheet, now Netflix is back to being a strong company because Netflix has a strong balance sheet. Netflix has no debt. That was going to be their only debt if they acquire Warner Brothers Discovery. So I say all of that to say, like, you think that them acquiring Warner Brothers Discovery would have did a good thing for the stock, but all of that news we seen what the stock did. As soon as they backed away from the deal and said we just going to focus on what we've been focused on, investors like that. Invest money start flooding back into the stock, and it was up like 8% overnight. Like, after hours, like I was looking at my phone last night, like, oh man, Netflix is up. Like getting notifications, like that's the beauty of compound interest, and that's the beauty of investing in companies that you know and love. And that's also the beauty in knowing the game. Knowing that, oh, just because they lose this Warner Brothers Discovery deal, don't mean Netflix is over. And it's no, the stock is going to actually like that news. So that's a good thing to pay attention to. Don't necessarily look at the headlines. You got to look at the balance sheet because that's what's really going to tell you what's going on with the company. The third part is your portfolio is out of balance. I'll give you an example on this. Nvidia ran. When I say Nvidia ran, Nvidia was like up. I was up like 120% on Nvidia. No lie, yo. I said, hold up. I gotta sell some of this because it became too much of my portfolio. So now if Nvidia went up or down, my portfolio going up or down. It's like, no, I gotta take some of this, rebalance, reposition it because I don't want to have one stock have 40% of my portfolio. That's too much. That's too much volatility. That's not stability. You know what I mean? So that's another reason that you might want to sell a stock. But I didn't sell all of my Nvidia. I just trimmed it down some. You know what I mean? Like, and now Nvidia back on selling it. I might buy it, but honestly, I'm still up on the Nvidia. I'm looking for new stuff because I'm up so much on Nvidia. I don't want it to take over too much of a percentage of my portfolio because that could get dangerous when it comes to stability and long-term growth. So that's my 3 reasons why you might want to sell a stock. The thesis change, or your portfolio is out of balance, or the business has changed. That's like my 3 main reasons. So when not to sell, listen, just because it's red, don't sell. That's normal. We already went over that. The markets go up and down, it fluctuate. We not selling just because it's red. As long as the story ain't changed, they still got a strong balance sheet, they still in the same business. Nigga, that's just people just in and out and out. We not worried about all that over here. Next, when not to sell, just because somebody else, you see somebody else online telling you, oh my God, the sky is falling. Nvidia just lost the Warner Brothers Discovery deal. It's not going to be, Netflix is not going to be it no more. They lost the deal. They lost the Warner Brothers Discovery deal. Netflix is over. Don't sell your stock because people are panicking. Know what companies that you love, so when they start talking all that nonsense, it just sound like noise. You just like, oh, yeah, whatever. Like, you know it's noise. So don't do it just because somebody else panicking, and also don't do it just because the headlines are saying it. You see everybody online saying this, oh, well, tech, all money is out of tech. Man, shut up, man. The market can't run without tech. The market cannot, I'm on record for saying it, the market will not get to new all-time highs without tech. It's impossible. Tech is already baked into everything we do. You watching this on the phone, and like you watching this on the phone, probably listening to it with your AirPods or some, like, bro, tech is already intertwined in our life. It's not going nowhere. It's just pulling back some because a lot of money too much money been going into it lately. So that's all it is. So, and when not to sell, don't sell because you're bored. Stop looking at your account so much. That's a sabotaging thing. Like, if you're looking at account, seeing what the market doing, cool. Don't be looking at your account, seeing what's going up. You're going to end up selling and you end up sabotaging yourself. Like, just put the money in there and just let it chill. Like, that's all. And also, man, this is so important. Get your emotions in check, people, because the market will expose you. Shout out to Trap. Wall Street Trapper says something so profound. He say, yo, the market will expose who you really are. So if you like an anxious person, the market gonna expose that. But if you're really a patient person, the market really will reward you. But the market exposes who you really are. Like, so if you anxious or you impatient or the market gonna expose you. real early. So don't get caught in the emotions. You know what I mean? Like, look at the fundamentals, look at the balance sheet, and pay attention to the story of the company. None of that changes. The price fluctuations really don't matter. And like I said when we first started, know where you're going to exit before you even enter. Get into a, man, if this stock dropped 30%, I'm out. So now you already got a number. You ain't got to worry about if it fell 20%. You're not, listen, they got another 10% to go, so I'm selling. Like, you got to know where you exit before you enter. And also know what percentage you want it to be in your portfolio. And write it down. Why don't people write stuff no more? Like, no, not in your phone. No, physically write it down. So you can have your phone there and then you can check your phone right there. Because then you have to go back and forth to your notes. And trust me, I did it, bro. I did it. I'm trying to help y'all out. Write it down so then you can look on your phone and bam, bam, bam. It's like, because you're going to be switching back and forth through apps and Yo, write it down. Pencil and pad or pen and pad is your best investment right now. And also, long-term investors versus traders, man. If you a long-term investor, when fundamentals change, you good. Like, when the fundamentals don't change, I mean, you good. As long as the fundamentals don't change, you're good. So don't think like a trader. Traders are worried about technical analysis and how much it fell during the day and Fibonacci's and 1348 crosses and the 200-day moving average. We're not doing it. I'm going to get into that here. I'm going to get into it, but not yet. I don't want to give my audience that yet. I'm trying to give y'all the foundation so we can get the building blocks before we start running option plays. Options will destroy your life. Trust me. You would never want to invest again just jumping into the options market. Like, trust me, dog. Don't do it. You got to build a solid foundation so then you can invest with confidence and invest knowing that all your bills is already paid and you got your emergency fund and got all of the things before you jump into that options bag. It's going to be months before I start telling y'all about plays and all that as far as options. We got to get this down first. You know what I mean? You ain't even writing down when you going to get in and get out of Apple yet. Man, you want to know about an options play? Like, yo, no, that ain't where it's at. Honestly, options, when you trading, because I did it before, day trading ain't nothing but another job. You just looking at charts all day. Yeah, that should get annoying. Like, I wanted to do it until I started doing it. And I'm like, no. And then on top of that, what they don't tell you, the taxes for all them trades they taking every year. Yeah, they ain't telling you about that. We gonna get, like, I want y'all to know the taxes and all that. Like, I want y'all to know the whole thing so y'all don't come out here jumping off a cliff, think you gonna make $100,000 trade and you just gonna walk off with $100,000. That ain't how it's gonna happen, big. So, closing thought, man. Appreciate y'all for being here, man. You gotta know when to cut your losses. You gotta know when to cut your losses, right? Cutting your losses is not weakness. Cutting your losses is not weakness. Holding on to falling stocks is not strength. Holding on to falling stocks is not strength. I gotta just repeat this stuff in your head because, listen, I did all of the dumb stuff. I used to think like, oh no, I'm just gonna make a whole lot of money. No, you gotta have a foundation to have the money start working for you so then you can start seeing it happen. And then once your brain start rewiring how you think about money, then you can start really going out here and getting it. Because we still got a lot of money trauma that, you know what I mean, that we got to deal with. A lot of people still think you got to work hard for money. No, you just got to think hard for it. So, know when to cut it. Like, be honest. Be fundamentally sound. Don't let your ego and your emotions talk you out your wealth. That's my closing point. I ain't going to go with all that, man. You already know, man. If you want your free stock of Robinhood, click the link down below. Get that, man. Like the video, subscribe to the channel. If you like the gems I'm dropping, make sure you hit the notification bell so you can get notified every time we drop them. You already know, man. Hope everybody had a good weekend, man. Yo, listen. Let's go out here and get this money.